So welcome, gentlemen. It's good to have you here. So just start by telling us a little bit about yourselves and what it is that you do. We'll just kind of start with you, Naveen, since you're closest.
Hi, I'm Naveen Kukreja. I run a lending marketplace in India. It's a combination of Money Supermarket in UK and Credit Karma in US, if you're familiar with that. So we have about 100 lenders on one side and about 2 million consumers who are coming every month to look for personal loan, credit card, mortgages, all kinds of loan products. We help connect the right consumer with the right lender and monetize.
Sandra?
I'm Sandro Reiss. I'm the founder and CEO of Geru. Geru is a lending platform out of Brazil. We service prime and non-prime clients to a fully digital platform, and we've been at it since 2013.
Hi everyone, my name is Laurent. So I'm the CEO of PayU, which is a payments company. We're part of a group called Naspers, which is one of the biggest tech investors. So I'm French, as you can hear. I'm based in Dubai, which is convenient because it's kind of shortly, halfway between Asia, and LATAM. And I've had the pleasure to actually, meet with these two gentlemen, over the time and invest, if not in them, in some of their competitors or building our own business. So.
And just to clarify, if anyone in the audience is wondering, Laurent Le Moal is not related to Ronan Le Moal. In case you thought you had two Le Moals, the same person on stage on two different panels. So, but they do know each other.
We went to the same school, the same year, the same name. So it's a very low probability of making it, in the same industry. But
they started at two Le Moals in the same class. You went your separate ways, and then you kind of.
I'm the immigrant one.
Okay.
Yes, absolutely.
All right. So just quickly, how much have you raised, and what's your valuation? If you can share that.
At a group level, which is two brands, Paisabazaar and Policybazaar, we've raised about 300 million, and our last valuation was 1.5 billion.
So we have a nice Indian unicorn, okay? And Sergey, he's like,
no,
oh, all right,
we are just about to announce a round, so no numbers on that.
Now's the perfect opportunity. Okay,
and
of course, PayU is part of Process, right? Which is
yeah. So Process, as I said, the biggest tech investor, which means we are a $100 billion market cap company listed on the Euronext. Largest investor in Tencent, etc. I'll give you another figure. We have invested close to $1 billion over the last 4 years. So 960 million exactly in 4 years, mainly payments, credit, and then other areas in fintech, including cryptocurrencies.
And Sergey, we were just discussing outside. We had a couple of, I think they're now both unicorns from Brazil, sitting right here last year with me. We had the CEO of Nubank, we had the CEO of Creditas as well, and then they just went on within weeks or months to raise hundreds of millions of dollars. So it's really good that you're here because
hopefully that will be the case.
It happens every time that anyone sits on one of my panels. But more seriously, do you, VCs, I guess to start with, it was more about, developed markets where there was clearly, customer needs, there was advanced finance industry, there was regulations were kind of already in place, and there was the talent to kind of hire. Do you get a sense that the mindset among investors has kind of changed at all and is now very much focused on the opportunities and the impacts that their money can have in emerging markets like Brazil?
Yeah, I think there's a lot of interest. Not all investors that play globally are prepared to play at emerging markets. There are some peculiarities, especially in complex businesses like payments and credit. But yeah, there's definitely more interest. And there's also a lot of arbitration kind of opportunities because when you look at a market that is somewhat behind the level of development that you have in other markets in terms of consumer habits, you have a little bit of foresight, which is interesting for an investor to look at.
And I mean, Kukreja, clearly you've already raised quite a lot of money. You said you're worth what, $1.5 billion already. In India as well, you get a sense that kind of this is seen as like a I don't know, not like an untapped market, but like where there's real, opportunities that perhaps exceed the opportunities that we would find in Europe or the US or in other developed markets.
Yeah, you're right. If you're looking at India from outside, some of the numbers are just mind-boggling, right? A population of 1 billion plus. Now with digital identity for all of those 1 billion, the largest market in terms of number of users for Facebook, second largest market in smartphones, uh, and one of the fastest growing fintech markets, very, very young population. So 65% of our population is under 35. So all of those factors make it like a very large and attractive market. And on top of that, India is a democracy. It's a very, very open market for external financial or a strategic investor to come in and either invest or set up businesses. And on the other side, if you see, in terms of the penetration, it's a very, very under-penetrated market. So there are only about 35 million credit card holders in India. That's about 3% of the population. The household GDP to household debt to GDP ratio is only about 11%. Compare that to US, which is 77%, and France is 60%. So those two factors make it look like one of the most exciting markets in the world, and which is the reason why the VCs would, if they're looking at emerging markets, they'll first look at India.
And Laurent, of course, being ultimately owned by Naspers, I mean, you're effectively an emerging market company to begin with.
Yeah, absolutely. That's the whole history, right? I mean, basically the first investment was done 15 years ago with Tencent. I mean, a gentleman put $15 million, in that business, and that business now is $300 billion, right? This can happen only in markets of the scale of China. The reality now is you start looking for other markets and you start looking for patterns of growth. India, Brazil. So for us, to make it simple, if you really consider what will be the top 10 economies in 2030, which is around the corner, right? 2030, you will have China, you will have India, you will have the US, Brazil, Indonesia, Turkey, and so on. There's only Germany that makes it at number 10. This is what is driving any large investor, okay? Any large investor at the global level is looking at these growth rates. Second thing is, and I'm gonna take my French experience, these are not emerging markets. Mobile penetration is higher than some of what we have here in Europe. You go to India, the amount of broadband, mobile broadband being used by the consumer is much higher than what you have in France, for instance, right? You can watch your cricket game on your phone, etc. And the third one, which is always around financial inclusion, we want to bring people to the banking world, etc. I would challenge that, take India, the same for Brazil, people are banked. Now, how they use this, how do we have access to financing is a different story. But we have moved so fast outside of the financial inclusion. Let's bring, the classic banking system. That's why these two guys here are really changing their markets. So we really have to challenge ourselves. This is where the biggest innovation, and if you're an investor, this is where the biggest returns will be. That's for sure.
I mean, we'll come back to financial inclusion in just a moment, but we're talking about like the huge numbers of people, a billion people. Brazil also, it's like
200 million.
200 million in Brazil, and that's all well and good. But at the same time, it's a democracy, or democracy as well. However, whatever you want to say about them. But at the same time, you've got regulations which aren't kind of necessarily always consistent. You've got elements of political instability. You've got also the fact that a lot of the people even using these services are actually quite poor and can't afford to kind of use them to provide the margins that, let's say, a fintech based in Europe or in the US is likely to get. So I'm just wondering, like, how do investors perhaps, because obviously you're building the businesses, but how would you kind of offset, let's say, the downsides of instability or regulatory uncertainty and lower wealth levels among the populations against the opportunity and the brute force of like, hey, there's 1 billion people here in our market?
Yeah. So very interesting. I think there are two levels at which the market needs to be understood. Indian market needs to be understood. One is a very, very high level, which is very simple. That while there are 1 billion people, there are only about 250 million people on the credit bureau. So that's about 20% of the population, 20-25% of the population. And secondly, while the number and the volumes look very high, our GDP per capita will be about 1/25 of US. So at that level, the math has to be done right, in the sense that you need to sell to about 20 people in India to make the same value as you would need to do that in US. And that, that was the initial error that some of the investors may have made, or the multinational banks which came into India made. But that was 90s. That sounds very elementary now. But that's a first level. And the second level is that, you think of the developed market ecosystem, developed market regulation, developed market credit bureau, and developed market stability, as you called it, and try and apply that, or assume that it'll be the same in India, and the model will just work. We'll come launch the product, and it'll work beautifully. And that just misses the granularity, the nuances of the market. So India is very geographically distributed, still not digitized. There's an interesting anecdote that I was in Germany about a month ago for an event, and there was an external foreigner consultant who was talking about Aadhaar, which is the digital identity project in India, and how the world should learn from Aadhaar. Whereas in India, back in India, we have 1 billion people on digital identity, but it's not allowed to be used for lending even today. So it is fairly complicated. It's very offline still. There is a lot of operational execution that's required. The financial awareness and the overall education levels continue to be lower versus the developed market. So all of those nuances, when you consider, it becomes very attractive, but a very difficult to execute market.
Yeah, perfect answer. The same applies to Brazil. I think I would add maybe that one of our jobs as a technology company is to try to tackle these types of particular problems using automation, using data science. And in order to work with people that are less financially sophisticated, and that sometimes they can provide us, in the case of Geru, better margins than what you would get from a lender elsewhere, not lower margins, just because the system creates anomalies that you can take advantage of. So we lend at 50% lower rates than the major banks that control the market, and we still make a very decent margin on those loans. And it's all about hiding complexity, ultimately. So trying to take all these peculiarities, all these complex things, and creating a beautiful, simple user experience that delivers to the client exactly what they need, fast, in an uncomplicated manner, and then unfold that all back to the capital markets, where you're going to get funded, either VC or on equity or securitization money on that capital markets. That has complexities, but are different complexities than the one you're tackling with the client. So if you can hide those complexities from both ends, as a technology company, I think that's where you do your job. And that's why País Bazar is not the Credit Karma of India, and Geru is not the lending club of Brazil. They are different companies. We spend a huge amount of effort on collections, for instance, which most lenders online don't do elsewhere. And that is responsible for a very, very important part of our profits.
And Laurent, when you approach these new markets, you obviously have got a lot of experience working in other emerging markets, so you can just kind of apply. Does what you've learned in one emerging market help you navigate another, or they're just all completely different? You have to kind of start from scratch.
Yeah, there is really not one size fits all in terms of models. The first one is, of course, if you want to deploy capital, in these markets, instability politically, regulatory challenges, etc., you need to flip it on your head, right? Because on the positive side, the pace of innovation, the pace of adoption is truly unique. My favorite example is always, again, in India, right? A platform like UPI, you know, real-time bank payments. It takes 10 years in Europe to build it, right? 10 years of, you know, central banks talking, banks, blah, 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 blah. It takes 18 months, really, in India to have a major adoption. So that part of, you know, the regulator, you know, having such a powerful impact and at the same time building a complete open platform is unique. The second thing is credit to the entrepreneurs that you find in the markets, right? The pace of innovation and how quickly, you know, you adapt the solutions to the different idiosyncrasies, you know, of the market is also very unique. Now, we spend a lot of time with our colleagues from Tencent in China, you know, so basically the guys of WeChat. You can't just say, I'm going to build a WeChat in India. It just doesn't work the same way. Some ingredients are missing, right? So it's not as simple as that. The reality here is, indeed, and we discussed that before, you know, we are not looking for the, you know, lending club of India, the Credit Karma. You are building it completely, you know, with a different business model, etc. So that's one. The second thing we see is we start seeing, you know, companies in India or in Brazil becoming regional, right? They have huge opportunities, but then spreading across Southeast Asia, etc., or across the whole of LATAM. And then the third one is you start seeing the money coming from these regions into all Europe sometimes, right? Where is the money coming from for the later stage investments, etc.? You will see more and more the end financials of the Tencent becoming a powerful for that. So there are different models. The reality is, again, it's all your long-term horizon. Over 10 years, who cares, you know, about the political instability when you see this rhythm adoption and the scale of these businesses? So.
And you mentioned financial inclusion before. I just want to kind of come at that slightly more tangentially. I don't know if for those in the room who were here last year when then IMF Director Christine Lagarde, of course now President of the ECB, was speaking, and when asked what the biggest impact was of Fintech, she said it was about reducing violence against women, which seemed like a bit of a strange thing to say. And she explained that, giving an example of a woman in Peru, I think it was that she'd met, who, thanks to her mobile phone, wasn't carrying cash, was able to kind of, you know, sell her wares at the market and without the risk of being robbed. And again, I don't want to be like, you know, take this patronizing approach to emerging markets. It's all about impact investing and making a difference. But do you, you know, when you are bringing financial services to people or banking services to people that have never had access to these things, and you are able to help them transform their lives, do you feel that there is kind of like a higher purpose to what you're actually doing in India, for example?
Yeah, it was a fascinating example, by the way. So there's also a big need that while, you know, I talked about the big numbers, but if you look at the prime population, as one would call it in a developed market, the prime population will be only about 70, 80 million. So outside of that 70, 80 million population, everybody is either at the margins or actually excluded from the banking system, specifically so from the lending and insurance system. And so there is a big need in the country to include them, make them aware about the financial options, products, responsibilities. And in the end, it tends to pay off because we are for-profit companies. We see that over a long time, it does tend to pay off. So for example, we run the largest credit score awareness initiative, very similar to what Credit Karma did, while they did it in a very developed economy. What we found before we launched the free credit score was that people were coming to take a loan product, were not aware about what a credit score is and how do they need to behave responsibility to kind of maintain that. And we now get about 700,000 new consumers every month who take a credit score for the first time, get to know their credit score, and then we try and explain to them on what do they need to do to maintain that good credit score. We've been doing that for 3 years. It started to pay off in the sense that we see those consumers using our product as the first product and a gateway to us, helps us build the brand and trust with them. And when they actually need the loan or the credit card or financial product, they tend to come back to us and take the product.
And in Brazil?
Yeah, I think we must have a purpose in what we do, and our goal is to provide credit to people that need it at a lower cost with bigger tickets than anyone else would do. And by doing that, 50% of our clients are basically going out of more expensive debt or something that is becoming harmful to their personal finances. And the other 50% are looking forward to a purchase or some relevant expenditure that they need to make. I think that's one side, that we are freeing up some of their income by giving longer terms and shorter and lower rates. On the other side, on the servicing side, sometimes people will lose their jobs. Sometimes a country will go through a recession, as Brazil did in the past 4 years. And you need to accommodate someone that is going to be unable to pay for a little while. And having a human approach to those things has also a lot of value. We have a 88% net promoter score. And a lot of that is due to the fact that we use technology to approach people in real situations and humanely.
You also talked about putting a lot of resources towards collections. Now, obviously, we're not thinking about, kind of someone knocking on your door in the dead of night with a baseball bat or anything. But in all seriousness, what do you do? Because I mean, there are people.
So basically, we built a completely flexible platform in a way that you can ask for a postponement on your payment. You can prepay if you have more money and take it out of future payments. You can change the due dates. If you really don't have the money to pay, you can reschedule the entire loan. And these types of things, they sound easy, but for all of you that work at banks, try to put it into your core transactional systems. Is not that easy to do. But we've been working a lot on that, and also on the interactions, the chatbots, and all the ways we negotiate and deliver that to the people.
But ultimately, you write off a loan if it's bad, or you kind of like sell it on to somebody else to kind of.
Well, we will provision it, but we will continue to work on it. Okay. So from the investors, we have securitization investors in the platform. From the investor perspective, they will see a loss. After 90 days, it's fully provisioned. But we continue to recover those loans to the securitization portfolios.
And Laurent, again, along similar lines, when you're kind of going about your business and building up PayU, is it just like a happy accident or a happy bonus of what it is that you do that can actually bring some broader benefits to the users and the society in which you're operating?
No, I think. So absolutely, in the markets where we are, right, when you have 5-7% GDP growth, right, it's all about, how you can bring hundreds of millions of people, into the digital world. And that's really where we see the line of inclusion and exclusion right now. It's not so much about do you have access to the classic banking system, is how much digital you are. Because the reality is, let's take Brazil for a change, right? The market where the banks are probably the most greedy in the world. I mean, it's shameful, honestly. I mean, we are talking about 100% APR on a credit card, right? Why do they do that? They're greedy, okay. But also because they don't have good systems, just to score the risk and so on and all the write-offs. Now, if you flip it completely, it's like, if you do have real access to data, right? And it can be payments data, transactional data, it can be your telco data, it can be different sources, and actually you build multiple ones, etc. But if you've got this, second thing is, if you really have the capabilities in terms of, credit scoring through machine learning, building your own algos, etc., you completely change the dynamics. So first you can have an impact. We're doing 1 million loans a month, in India right now. Most of the people, it's the first time they have a credit product. Do you have an impact? Yes. Do you have a responsibility? Yes. You need to explain. You need to be transparent. You need to educate them. Absolutely. But the reality is you can do that only because you've pushed the boundaries and around the data and AI investments. And this is where we see new form of exclusion potentially being happen, right? It's going to be about if you don't generate data, if you don't create data, if you don't share it, you're going to be blind, you know, so we won't be able to include you in this. So that's a new form of exclusion, right?
One of the things I'd like to say is that on any initiatives around inclusion, awareness, doing good for the society, something that I've seen and observed is that it has to eventually be aligned to somewhere to the financial metric. That's the only way it will become sustainable. So when we started the credit score initiative, for the first 6 months, it's a right thing to do, and we went in with the belief. But if the financials hadn't come around, it would not have made the initiative sustainable. Similar to the example you shared about, you know, the women carrying mobile, the money on the mobile. I hope that financially it starts to make sense for whoever is driving that, which is the only way it becomes sustainable in the long run.
And financial education, I think it's a big topic, right? Ultimately on the inclusion. I mean, creating products and allowing people to access these products are one thing, and the other is to make sure that people know how to use it, understand what they're doing, and in our experience, whenever you try to be patronizing about it and you try to create content and blogs and etc., that doesn't work. So what we did at Geru, we created a little game where the clients, by paying their loan, they start to get better things. They get one installment off. They get I think this is a different way to bring in financial education and talk to people about why did you miss your payment. So what can you do if you miss a payment? Well, what's the best strategy for you to go back to being on time? Things like that.
It's interesting you say that. Where I had the CEO of Stash, which is based in the US, yesterday on one of my panels, and he was talking about financial education and how actually their content writers aren't, you know, ex-journalists or marketing people. They're primary school teachers because so many people just haven't got the first clue about investing, which is the way that he was putting it. So it's interesting how, you know, there are kind of similar challenges, let's say, for people in different countries, which actually nicely brings me on to my next question, which is, again, Laurent was talking about, you know, maybe we'll leave the Chinese aside because it's a slightly different kettle of fish, but in terms of, you know, fintechs in emerging markets, once you're kind of establishing yourselves in your markets and then expanding maybe regionally to LATAM, are we going to start seeing, you know, kind of, you know, emerging market, quote unquote, fintechs kind of coming to Europe or the US and maybe kind of, you know, being the acquirer rather than just kind of being taken over? Do you think that's likely to happen perhaps by 2030 when they're the top 10 biggest economies? Laurent?
Well, so first, they're very busy in the different markets where they are, right? Building up, you know, huge businesses. I mean, the valuation, the money you can raise right now, be it in Brazil or in India, it's absolutely astonishing, right? The reality is, first, you need to talk about the big Chinese duopoly, right? Alipay and WeChat. I mean, this is already a reality, right? The first thing that you start seeing is just follow, you know, the Chinese tourists, and there's like 150 million of them, right? Start seeing, you know, in all the shops, as you start seeing, here you can pay with Alipay, you can pay with WePay, etc. This is already a reality. Investments are starting to happen. One of the biggest fundraisers in fintech in France, in Conto, was Tencent, right? Also, you're going to see more and more of that also. I think, yes, you're going to see more of these really established, you know, regional plays, be it, you know, in Southeast Asia, I think India, I think LATAM, Africa as well. We see that everywhere. We're talking about, you know, hundreds of millions of user base. We are talking about people who quickly get very sophisticated. I mean, you should see the level of sophistication on what they do, you know, on WeChat. I mean, I can talk, I can really pay, but then I can buy, you know, mutual funds, I can deposit, etc. I mean, that's a level of sophistication, actually, that honestly, none of the neobanks in Europe have reached yet, let alone in the US. I think it's going to start spreading. In terms of investment, yes. Then I think, yes, we'll see at least in payments more and more consolidation. So I always say, it's like, maybe there will be only one European company left in payments. Then it will be US, Chinese, and a couple of, other emerging markets players.
Which is going to be the one left in Europe?
I will buy the stock, but you buy me a drink, I will share and make a bet.
Okay, we'll find out at the party tonight. Naveen, obviously you've got your work, as Laurent was saying, you're focused on India, on building your business, and I guess a market of 1 billion people is probably enough to sustain a pretty sizable business anyway. But I mean, ultimately, do you think we are going to see, coming out of India and maybe becoming a regional player and then perhaps on from there a global player?
So this question was getting discussed yesterday also. I was attending a panel on new banks and how will it evolve over the next 5 to 10 years. My view is that there will be some companies who will emerge from emerging markets and become a regional force, if not a global force. But it'll be very interesting. So for example, I can talk about ourselves. We are very, very focused on India. We get tempted by the regional opportunity, especially in Southeast Asia, where the markets are very similar, the challenges are very similar. But so far we've stayed away from that, and because the Indian opportunity looks very big to divert away from. But you never say no. I'm aware of a couple of people in India, lenders in India, who are already looking at Southeast Asia. And I know there are a couple of large players in China who are looking at India and going global. So over a 5-year period, I do see a few players going towards developed markets and trying to build a base there or compete with the existing companies. But we'll also see how the political situation then emerges or try to protect the local players.
Yeah, I have a slightly different view. Some companies are already coming out of emerging markets to conquer the world. I don't think that happens in fintech often enough. But if you look, for instance, Gympass is a Brazilian company. It's global. It's everywhere. It started in São Paulo, Brazil, with 5 companies. So this is happening in other areas. But fintech is built on rails that take a lot of local infrastructure, local regulation, local things, which are becoming less and less tangible and more abstract, and APIs that represent these things. So I think the next generation of fintechs, it doesn't matter where you're going to come from. It's going to be a global play. But the current companies, I think it's very hard to have a global reach in something like lending, for instance, where you depend on data, you depend on regulation. So you can do short-term lending, you can do a cash advance, but to have a full-fledged lending operation that's global, it's still not there yet. And I don't think any global company can go into Brazil or India and do such a great job either. I mean,
just a point on regulation. At least I'm aware of emerging market regulations. The regulators have so far ensured that the domestic companies have a advantage versus the foreign companies, almost in all areas. So it's not a level playing field. I don't know how will that emerge in the future. Maybe Laurent is a better person.
Sorry, but if it were a level playing field, would you be raising hundreds of millions of dollars and being unicorn status? I mean, if anybody could come in, it would have been presumably harder and more competitive.
So we'll see a lot more, and that's one of the big reasons why the fintechs and the banks are more dominant in their own countries and not so much globally. If it was a pure level playing field, of course you'll see a wider movement both sides, and at least right now more movement will happen from developed to emerging. But yeah, in the 5-year period, yes, of course, from emerging.
Yeah, well, we could discuss that, right? Look at Google Pay, in India itself. Look at Amazon, etc. I think India has really demonstrated, being extremely open, actually, to foreign players. Now the reality, I think the battle is shifting. All of our businesses exist purely because there is data being generated. I think that's for us the big topic, right? Is the strategic asset that you need right now is access to data. You don't need to own everything, but get access to data, and then purely how much money are you spending on AI terms of people, the skills that you develop, the platforms that you have, etc. That one actually is still very local, but what is sure is of all the companies that we see, etc., we see a lot of innovation and attention to that coming out of Southeast Asia, China and Southeast Asia for sure, and they really have truly a global roadmap to access data. So the data will truly be, fragmented, super local. I think the governments have perfectly understood that, wow, everything is in the cloud, that's okay, but I want the cloud to be on top of my country. That's really the next battle, this one.
Okay.
But I think some people are truly going after all the global assets.
Okay, well, really fascinating discussion, guys, to understand about the challenges and opportunities of building fintechs in emerging markets and perhaps what the future holds in those countries. Thank you very much. Do please give a round of applause to Naveen Kukreja, Sandro Reiss, and Laurent Moal.